Hello everyone, welcome to EduTap and welcome to the Finance 360 degree sessions in which we cover the relevant RBI notifications and the news articles, the finance current affairs which are important from your exam point of view. Let it be the RBI grade B, the NABARD grade A or the SEBI grade A. And in today's session, I have brought for you a very important scheme of the Reserve Bank of India that was quite in news. So the scheme is the most important part here that we have to discuss and you have to remember from the exam point of view. Okay, so this is the liberalized remittance scheme of the Reserve Bank of India, and today we are going to have the clarity about the liberalized remittance scheme, and we will also understand that why this scheme is recently in news. Okay, so all of this we are going to discuss in today's session, and as you have seen in the RBI grade B examination, the schemes are directly being asked. The questions, the objective questions, the descriptive questions are directly being asked from the schemes. Okay, so that's why we have to have the great clarity about this scheme. So today we are going to have the understanding. So let's start with this, but before that, do subscribe to the YouTube channel of EduTap and join our Telegram channel for the PDF of today's session. So the PDF of the session you will get in the Telegram channel, and the link for the Telegram channel is provided in the description box below. So good morning everyone, it's so good to see the good morning from all of you. So good morning everyone. So let's start with it. Let's start with the news article first of all. So this is the news article that has been released regarding the liberalized remittance scheme, that is talking about the credit cards being included, the international credit cards being included in the liberalized remittance scheme. But you will be able to understand this whole of the news article first if you have understood about the liberalized remittance scheme. So first we need to understand about the liberalized remittance scheme, then only you will be able to understand this news article. So let's start with the liberalized remittance scheme. So LRS of the Reserve Bank of India, this is a scheme of the Reserve Bank of India that allows the resident individuals, that only allows the resident individuals to remit a certain amount of money during a financial year to another country for investment and for the expenditure purposes. That is only for the resident individuals this liberalized remittance scheme is there, and this is allowing the resident individuals to remit, to send certain amount of money during a financial year from April 2023, let's say, to March 2024. Okay, so this is the idea that the certain amount, there is a limit that has been provided under the liberalized remittance scheme. So till that limit, there is the allowance of sending the money abroad in this time period in a financial year. Okay, so this is the idea. So what used to happen before, like before a few decades ago, that remitting the funds abroad to educate your child for the health purposes also, or for any other purposes, for the investment purposes, remitting your funds outside, taking your funds outside, it was a very troublesome process. You had to take multiple approvals from the Reserve Bank of India. So to make it easier for you to remit the funds, for you to send the funds, or for you to take the funds with yourself to abroad, there is the liberalized remittance scheme that has been introduced by the Reserve Bank of India, and this was introduced in 2004. So we will keep on understanding more and more about this scheme, but the basic idea is that it was very difficult for the resident individuals to take their funds outside the country, or to send their funds, to send the money to their children or to relatives living abroad. But now with the liberalized remittance scheme, it has become easier for the people to remit the funds till a limit. There is a limit that has been defined also under liberalized remittance scheme. So what are the key ideas of the LRS that you have to remember is that the LRS lays down the guidelines for outward remittances from India. That is, if you want to send the money outside, if you want to send the money to abroad from India, there are the set of guidelines that have been provided under the LRS. That is, you can easily send the money till a limit. Okay. So it is part of FEMA, that is the Foreign Exchange Management Act of 1999 by the Reserve Bank of India. So LRS applies to all the resident individuals in India. Let's say that your child is living abroad, but you are not able to send the money very easily. You have to take multiple approvals for your medical treatment that is necessarily has to happen in abroad. So for that you have to take multiple approvals. How long can you wait? Okay, so it can come to the die situation, the live and die situation. So that's why, to make it easier for the resident individuals to send their money abroad, it has been liberalized remittance scheme has been introduced. Even if you want to take your money outside for the tourism purposes, for also the resident individuals can remit their fund or can take their funds outside under the LRS. Okay. Yes, we will discuss that what are the purposes in detail in the coming slides, but this is the brief idea. Under the LRS, the upper limit of remittances in a year, in a financial year, is $250,000. Okay, so that is the upper limit for now. That is $250,000 per financial year for a resident individual. You can send money abroad for genuine reasons like your child's education or to fund personal expenses or for your traveling purposes. You can take money outside, but for the genuine reasons. It's not like that you want to buy the lottery abroad, for that you want to take the money, or you want to do the terrorist funding and that's why you are sending the money abroad. So for sure that cannot be allowed by the Indian government. So you cannot remit funds abroad for buying the lotteries or banned magazines amongst other reasons. So that is the purpose that you need to send. If you want to send the money for the genuine reasons, you can send it, but not for the banned reasons. Okay. In 2004, there was the Committee on Procedures and Performance Audit on Public Services that recommended a scheme for liberalizing the personal outward remittances, because before that a lot of approvals had to be taken from the Reserve Bank of India, that was making the remittance system very troublesome for the common people that actually had the genuine reasons for taking the money outside. Okay, so to make it easier and to also have a upper limit on the remittances, this scheme was introduced. Okay, the same year, that is in 2004, the RBI introduced the LRS, allowing the Indian residents, the resident individuals, to make individual foreign exchange transactions with relative ease, with comparative ease, till a limit. There is the ease of sending the money outside. Now, this is the basic idea, that the scheme is available to all the resident individuals, let it be the adults or the minors. They can send the money outside relatively easy, or they can take the money outside relatively easy now. You can send up to $250,000 abroad in each financial year, and the LRS is only for the resident individuals. That means it is not available for the corporates, for the Hindu undivided family, or for the charitable trust and such, partnership firms and such. It is only for the resident individuals. So what is the whole idea of the LRS? You can see that through this paragraph. So under the liberalized remittance scheme, all the resident individuals, including the minors also, they are allowed to remit, to take the fund outside till the limit of $250,000 in a financial year for any permissible current or capital account transactions. So what are these current and capital account transactions? So first of all, capital account transactions are the transactions. Let me tell you that in the balance of payment, that is, if you are doing the transactions with other country, there are two accounts majorly. Okay, that is the current account and the capital account. The capital account includes all the investments that is happening, as well as all the borrowings that is included in the capital account. That means, remember that the capital account includes all the assets and the liabilities. The capital account also includes the aids, that is the grants, the grants come under the current account. What is happening to this? So the aid, that is a country is giving aid to another country, that also comes under. Okay. So aid, a country that is giving to another country, like our country has given aid to Sri Lanka, Bhutan and other countries. So that is aid, that is also coming under the capital account. We are giving aid to another country, the another country is giving aid to our country. Okay, so that all comes under the capital account. But now we are not talking about governments, we are talking about resident individuals that are doing the investment in other countries, that are taking the borrowings or giving the borrowings to other countries. So that is the capital account. In the current account, it includes all the transactions on the daily basis, like we are traveling abroad, okay, or we are remitting the money abroad for our relatives. We are doing the remitting of the money abroad to our relatives. So that also comes under the current account, as well as the grants that the government is giving, that also come under the current account, but we do not have to discuss that because that is as per the government. So there are the two accounts, the current account and capital account. Capital account includes all the assets and the liabilities, as well as the current account includes all the basic the money that is being sent out, or all the basic transactions that you do, like you are sending the money to your relatives or to your son or to your daughter, or you are traveling abroad. So in the capital account, the opening of foreign currency account abroad with a bank, with a foreign bank, so that is you are sending the money to invest it or to save it in the foreign currency account so that you can earn the higher interest maybe. Acquisition of immovable property, that is you are building, you are doing the investment, you are building the asset, so that is acquisition of immovable property abroad. Overseas direct investment, for the overseas direct investment you can do this kind of transaction. Overseas portfolio investment in accordance with the FEMA rules 2022. So this is the idea that you can do the investment, the foreign portfolio investment, the foreign direct investment, but there are some limitations that have been given under the FEMA Act, and as per that only you can invest. Okay, so for the property, immovable property, for the foreign direct investment, you can do that. You can buy a property in some other country. But if you want to do portfolio investment, there are some limitations that are there. Like you cannot invest in the foreign currency convertible bonds and such kind of some instruments that are your restrictions, that are the restrictions for the resident individuals. Okay, so extending loans, you can also give the loans. So borrowing, you can give the borrowing. Okay, because here we are talking about remitting the funds, sending the funds. So you can extend the loans, including the loans in Indian rupees, to non-resident Indians who are relatives as defined in the Companies Act of 2013. So that is the whole idea. Okay, now current account transactions. So current account transactions means that the daily transactions that you do or the regular transactions that happen. So that is the private visits to any country, gift or donation, going abroad for employment, immigration, maintenance of close relatives abroad, your daughter, son, or your relatives that are living abroad, traveling for business and such, expenses in connection with medical treatment and studies abroad. So these all come under the current account that are considered the regular transactions from a country. Okay, so these are the current and capital transactions that are allowed in the country. Okay, so this is the idea, or a combination of both. So these are the permissible current account, capital account transactions that you can undertake. Further, resident individuals can avail of foreign exchange facility. So it's not only that you are sending the money abroad, you can take the money with yourself for the traveling purposes. You want to convert your rupees into the dollars. So that will also come under the LRS only, under the liberalized remittance scheme. That means if you want to undertake the foreign exchange facility for the purposes mentioned in the current account transactions, that is we have seen in the current account transaction, if you want to convert your rupees into dollars, that is you want to take the foreign exchange facility for taking your money outside. So for that also you can avail this scheme. That will also come under the scheme. So this scheme was introduced on February 4, 2004 with a limit of $25,000, and now the limit is 2,50,000. Now this is the basic idea of the scheme. Now there are the authorized dealers such as the banks that can facilitate the foreign exchange transfer or the foreign exchange facility conversion for the resident Indians, but for all the transactions that are happening under the scheme, the PAN card will be required for all the transactions. Okay, so this is the basic idea of the liberalized remittance scheme. Now under the scheme, which of the following services is not available? That is, you cannot remit the money for buying the magazines that are the banned magazines or prohibited magazines, or buying the lotteries or such. Remittance from India for margins or margin call to overseas exchanges or overseas counterparties. So this is also not allowed, that you cannot do this kind of investment abroad. Remittances for purchase of FCCBs, I have told you that foreign currency convertible bonds, as well as remittance for trading in foreign exchange abroad, you cannot do so. Capital account remittances directly or indirectly to countries identified by the Financial Action Task Force as non-cooperative countries and territories. That is, you cannot invest, you cannot buy the
immovable property, or you cannot do the portfolio investment in these countries that have been recognized as non-cooperative. Okay, remittances directly or indirectly to the entities that are posing significant risk of committing acts of terrorism against our country. You cannot send the money there, because if you are sending the money there, then you can be linked to a terrorist organization or something. Okay, so that is the basic idea. Gifting by a resident to another resident in foreign currency for the credit of the latter's foreign currency account. Basically, the idea is that you cannot do the foreign currency exchange abroad. You have to do it in our country. Okay. There is too much brightness. Just a second, huh? Is it fine now? You can take a screenshot also. And the PDF will also be provided to you. So now coming to the next point, that is clarification on remittance by sole proprietor. So in the definition, we have seen that the Hindu undivided families or the partnership firms, the corporates, they cannot be under the liberalized remittance scheme, because the liberalized remittance scheme is for the individuals. The sole proprietor, the sole owner of a company, the sole owner, he is a single person, so that is an individual, so he should also come under the liberalized remittance scheme. Okay, so in a sole proprietorship business, they will also come. There is no legal distinction between the individual or the owner. That is, a person who is the exclusive owner of a business, he will be considered an individual only, and he will come under the liberalized remittance scheme also. So remember that the clarification is provided that the sole proprietor will also come under the liberalized remittance scheme. Setting up wholly owned subsidiary, so he can set up the wholly owned subsidiary in the other country, or can have the joint venture outside India for conducting business that shall be subject to overseas direct investment regulations. So the basic idea is that if he is a sole proprietor in our country, if he is a sole owner of a company in our country, then he will come under the liberalized remittance scheme and can undertake the direct investment in the other countries under the LRS scheme. Okay, now these are the some of the facilities that are provided to the people other than the resident individuals, that is to the partnership firms, to the corporates, to the Hindu undivided families. These are some of the facilities that are provided to them other than individuals. So you can understand that there are different rules and regulations that are present for the partnership firms, for the corporates, and for the resident individuals. There are different norms. Okay, so you can read this. This is not very important, but I have brought this for you to make you understand that there are the different rules and regulations for the resident individuals and for the partnership firms, corporates, because they are the big organizations, so they should be able to do more transactions as easy as that. So you can take a screenshot and you can read it out, but the basic idea I have provided you. Okay, so basically donations up to 1% of their foreign exchange earnings during the previous 3 financial years. So of course, if it is a company, if it is a partnership firm, they can do so. Commission per transaction to agents abroad for sale of residential flats or commercial plots up to this limit. So that is allowed. Remittances up to USD 10 lakh per project. So that is a huge amount. That is not even a total limit of the LRS. Remittances up to 5% of the investment brought into India or USD 100,000, whichever is less, that is also allowed to the companies by an entity in India. So these are the basic idea. So anything in excess of the above limits requires prior approval from the Reserve Bank of India. So this is the idea that if you want to remit more, if you want to send more money outside, you have to take the specific approval from the Reserve Bank of India till these limits. Everything is allowed. Okay, everything is allowed means the whatever has been defined is allowed. You can send the money abroad for the traveling purposes or for other reasons, but if you are breaching this limit, then you have to get the approval from the RBI. Okay, so now coming to the news article. So what the news article is saying. So in 2023 May, what happened, that there were the news articles that were coming that the Ministry of Finance has also said that we want to bring the international credit cards under the liberalized remittance scheme. So what was happening, that the debit cards, if you are taking your money out from the debit cards and then you are converting it into the dollars, or let's say you are using the foreign exchange cards. So when you are going abroad for the traveling purposes, the foreign exchange cards are given in which the dollars are stored. So the foreign exchange cards actually store your dollars, like your credit cards or your debit card store your money na, store your rupees, or the foreign exchange card, they store the dollars. So they all come under the liberalized remittance scheme. Even your debit card comes under the liberalized remittance scheme, but the international credit cards, they were not coming under the liberalized remittance scheme. So spending in foreign exchange through international credit cards, it was said in 2023 that it will be also covered under the RBI's LRS, under the liberalized remittance scheme, because using the international credit cards, it was actually a loophole that you can use your liberalized you can use your international credit cards, and they were not being included in the LRS. So you can easily breach the limit. You can do, instead of $2,50,000, you were doing $5 lakh, let's say. So that was actually breaching the LRS. Okay. So earlier only the debit cards and the foreign exchange cards and the bank transfers were included under the liberalized remittance scheme. But now it has been said that if you are spending using the international credit cards, that will also be included in the liberalized remittance scheme. So this was said in May 2023 by the Ministry of Finance, and it was also a news article that came in PIB and such. So it was a big talk at that time, but there was a time that was given to the banks, and recently it has again came into the news that now the banks have started to prepare for such kind of transfer that can happen very soon by the Reserve Bank of India. So banks get ready to count international credit cards spent in liberalized remittance scheme. So there is no definite news that is still present, but you have to understand that there is the preparation that has started from the banks, because the RBI can anytime suggest that, okay, now start counting the international credit cards in the liberalized remittance scheme. So this is the whole idea, that earlier expenditures through credit cards were not accounted for under the specified LRS limit, which led to some individual exceeding the annual limits, and now the differential treatment between the debit cards and credit card is sought to be removed through the changes. So that is the basic idea. That was the news article, and it was quite in news. That's why the LRS became important, because there was the discussion that was going on regarding the LRS also. Any confusion now? Aman, like I have told you that the overseas portfolio investment is allowed. Overseas portfolio investment is allowed, but there are some limitations, like the margin or the margin calls, as well as the foreign currency, convertible bonds, foreign exchange abroad. So that you cannot do. Okay. So portfolio investment is allowed, but some limitations are there. Okay. Clear everything? So try to answer this question. This is the first question that you have to answer, and this is the second question that you have to answer. Okay. So first question, take a screenshot, try to answer this question. This is a homework question. And this is the second question. Again, take a screenshot, try to answer this question. This is a homework question. This is a homework question. Any confusion anyone has, they can ask. But before that, there is a big announcement from EduTap that we have brought for you the comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook, you are able to get much of the information regarding the examination. If you want to know about the previous year, like if you want to know about the pattern, the syllabus of the examination, even the previous year papers are also provided with this guidebook. And they are absolutely free of cost to save your time, to save your efforts. So you can easily download these guidebooks. The link is provided in the description box below. So do download these guidebooks to get the required material to understand better about your examination. You're most welcome, everyone. Exchange currency derivatives. Tanushri, I was finding that in the RBI website. I will have to see that where it has been released. Okay. So if there is a, if you can send me the link in the comment section also, I will go through that link because in the RBI website, I was not able to see it. Okay. Okay. And the guidelines, I will have to see that the guidelines are the recent guidelines, then only we will be covering that, because we do not cover the static much now. We only have to cover the current affairs. So if it is in the current affairs that is recently released, then we will cover it. But do send me the link if you can send, okay, in the comment section. Okay, thank you very much, everyone. Thank you for joining the session. It was wonderful to discuss the topic with you. If you have any confusion, you can comment in the comment section regarding your confusion, as well as do tell me the answer of the homework questions if you have understood the news article. So thank you for